In other words, they're worried that US interest rates will rise sooner rather than later. Until recently, the United States has kept rates very low, and it's pumped money into its own economy, which has sloshed around and landed up in investments around the world, including here in South Africa. The fear is that the party's coming to an end, and there's uncertainty about the timing. That's why when the US Fed suggested this week it was taking a very patient approach to raising rates, the market shot up. Yesterday, the JSE saw its biggest jump in one day in almost 6 years. Let's take a quick look at the winners and losers on the market this year. The best performer for 2014, a very unusual suspect, despite gold prices falling and the gold miners having a very bad year. Sibanye Gold defied the odds. Telkom at the top of the pile. The food producers are also looking good this year. Now, the worst performers were also unexpected. Ely suffered as investments into preparedness for digital terrestrial television went awry due to delays in the switch to digital in South Africa. The rest of the bottom is made up of stocks heavily affected by the downturn in infrastructure spend.
As for this week, we saw volatility hit its highest level for the year, and the JSE fell to its lowest in December. But since Wednesday, it has been rising again and was 4.5% higher than at the start of the week. The oil price roller coaster also continued. First, prices fell at the start of the week to below $60 a barrel. But traders did not see this as sustainable, and the price rallied again to above $62. This morning, it traded as low as $58. In between, we saw Russia's currency crisis put pressure on most emerging markets, and the rand fell to as low as R10.72. The local unit recovered, though, after the US Federal Reserve indicated midweek that interest rate hikes may have to wait.
Let's bring in our commentator now, Ian Cruikshanks, Chief Economist at the South African Institute of Race Relations. Firstly, Ian, welcome.
Thank you.
Isn't
Thanks,
it
Francis.
astounding to you that people around the world are looking at demand and supply when it comes to oil, and nobody seemed to have realized that this big plunge was coming? It makes you question forecasts and everybody who seems to know what's going on in the economy.
Well, I think when the price got pushed up so high, there was a question of running down inventories to some extent. So there wasn't enough the same amount of oil in stock. But in addition to that, of course, the Americans came along with the shale sands supplies and got those into operation. Now, I believe that they can operate on a break-even basis down to $50 a barrel. So now it's a race between the Saudis, the previous biggest supplier, and the US, a race to the bottom almost, to see who can hold out for longest. So there's a lot of protection of market share there as well. That could not have been anticipated.
Okay, so we'll forgive everybody who got it wrong.
Not quite.
What does it mean for South Africa? Because it's good for motorists, good for our petrol price, but there is this bigger picture that it points to low demand. We're seeing a lot of volatility affecting us. Pros and cons. Let's
start off with the good points. There are some. Fuel is going to, probably petrol will come down by over R1 a litre next month if the dollar rand exchange rate stays about where it is. Remember, we pay for oil in dollars, and if the oil price stays around about where it is now, we could get a relief of up to R1 a litre. Sure. That's 10% almost. That's a lot of relief. However, in South Africa, when the price goes up, the cost of basics like bread and meat and milk and whatever all go up in anticipation of higher transport costs. And when the oil price and the petrol price come down, the motorist never gets it back. The consumer never gets it back. So we've got a built-in higher inflation trend there, so that we don't get a big benefit there. The other
Shouldn't we hold the retailers to account?
I think they should be. Because where does it go?
Watch prices and say, why aren't they coming down?
Because margins get padded. And what they will say is, well, our margins have been so skimpy in the recent times when there's been pressure on transport costs, we're trying to get back to break even again. Don't believe it too much. It's a question of South Africa, everyone for themselves, take a profit while you can.
Yeah.
The other thing to remember, though, is with this weaker oil price, we've had weaker commodity prices. Remember also that oil is a leading indicator for the whole energy, industrial, commodity sector, and that's what we depend on for our exports.
So we're talking about gold, platinum, silver,
iron ore,
everything
steel,
as well. Yeah.
coal, whatever. And now these tend to follow the same trend direction as oil takes, because that, after all, symbolizes total economic activity. If that's coming down, it means you're going to have less exports, pressure on our trade account, current account deficit, once more maintaining pressure on the rand.
What about the rand? Because we know we're being caught up in a lot of global forces, local forces as well. We are seen as vulnerable, living beyond our means as a country, maybe as a simple way to put it.
Right.
What is the trend heading into 2015? More weakness, or could things turn around?
Well, that can always happen, but I don't believe in miracles, so I'm not so sure that's on the cards. But what I'd like to say is that, recently we had the rand in the range. You were showing that 1080 to 1120, broken through that 1120. That ceiling becomes a floor for a new higher range. Maybe we get 1120 to 1180. But I think that by the end of this year, we could well see the rand in the range of 12 rand to 12 rand 50. We've got a very high trade account deficit, a high current account deficit, a high budget deficit. The government seems to spend like money is just manufactured. It's not. And this is where we're getting into trouble.
Ian, please stay with me.
Right.
We've got a lot to look back on for the
Yes.
rest of the year, and we'll come back to Ian Cruikshanks after a break. First, let's take a quick look at the numbers today. After recording its biggest one-day jump in almost 6 years yesterday, the JSE has managed to eke out even more gains. Not much, though. The all-share index adding 1/5%. The platinum miners were in the lead. Here's a look at your financial indicators.